Hey everyone, I am back with another dividend stock investing video. I am choosing Aloha today because I am filming here from the beautiful Sheraton Resort where they treat you like a king on the Kaanapali Beach in Maui, Hawaii. I want to talk today about 3M Company. On the plane flight over here, I did quite a bit of research on their Q2 earnings report, and I want to share my findings in the video today because 3M Company represents about 5% of my dividend stock portfolio. Right now, 3M Company is yielding 4.19%. That is a huge starting dividend yield, and it's trading at a PE ratio of 13. What is not to like? In fact, I recently purchased more shares of 3M Company. I'm going to share that on the screen in front of me right now. Check it out. That is my recent purchase. I've already shared this with my patrons. They're already aware of this because I share all of my stock trades for dividend stocks over on Patreon. Check out the pinned comment below to learn more about that. But I'll tell you, 3M Company right now is facing significant headwinds. There's some wind right now, trade winds here in Hawaii, in beautiful Maui, Hawaii. So the phone is probably moving around just a little bit. And I have rigged up an interesting setup here for my video today. So hopefully it's working out just fine. But 3M, just like Maui, Hawaii, is facing some headwinds. And so I want to share that in the video today. I'm going to share what I found on the plane flight over about 3M Company. Get ready, everyone, for an exciting dividend stock investing video. Welcome to PPC Ian. This is dividend stock investing for everyone. All right, everyone. So I'm so excited about the video today. I'm going to share a variety of slides on the screen in front of you as I speak. I'm doing my best here to steady my selfie stick, and I have my Stanford notebook with me as well. So I have an interesting setup today. So please bear with me if the video is moving around just a little bit. So I want to go through 6 different themes today. The first theme pertains to their Q2 earnings, and I want to talk about some terrible numbers, terrible Q2 GAAP numbers. So check it out on the screen in front of you right now. What I want to share with all of you is what's going on at 3M. Well, when I was analyzing their GAAP numbers, I saw some significant inflation issues. I saw gross margins shrinking. I also saw operating margins shrinking. Gross margins, without a doubt, is indicative of high inflation because it's becoming more expensive to produce the products that they sell. Now, operating margins may be up not only due to inflation, which could be personnel costs, but also just due to the huge, they call it significant litigation that they are experiencing right now. And so SG&A, sales, general and administrative, is way up, and I think that may be indicative of some of the tremendous, significant inflation that they are experiencing at 3M right now. I want to talk about the GAAP EPS. GAAP earnings per share are way down. They came in Q2 at 14 cents per share versus $2.59 just a year ago. Margins are down. Now they adjust their EPS. If you look at adjusted, they came in at $2.48 per share versus $2.75 a year ago. But what's so interesting is they are just, what's the difference, you may be wondering, between the adjusted number, which is $2.48, and the 14 cents GAAP? It is all due to litigation. I'm going to share on the screen in front of you all. They have a handy graphic that just shows the difference between GAAP and adjusted, and it is all due to litigation, and a lot of that litigation is due to the earplugs, which I'm going to talk about in a minute. A lot of that litigation is due to PFAS, which is a chemical compound that could cause a lot of troubles down the line for them. And so there's no free lunch with dividend stock investing. When you get a PE ratio of 13 in a market like this, a starting yield above 4% on a world-class name like 3M, you know there's no free lunch. There's something going on, and they're facing some challenges right now with the litigation at that company. So that's the first theme that I wanted to go through in the video today. I want to talk about another theme next. And so as you can all see on the screen in front of you right now, the next theme I want to talk about is a terrible free cash flow. Their free cash flow is way down. It's down 41%. Now there's no doubt that the free cash flow is getting affected by all of these themes that I just mentioned. Their free cash flow is probably being affected by litigation. It's probably being affected by inflationary pressures. That being said, I also read a footnote, and the footnote was talking about free cash flow conversion, and it was saying it's temporarily down due to working capital and R&D restructuring. And so I need to look into this a little bit more. Honestly, before this video and on the airplane, I didn't look into free cash flow too much, but when I see free cash flow tank this much, it concerns me, because it concerns me, are they going to be able to continue to maintain the dividend? Is this ongoing litigation going to ever end? It's significant, as they mentioned. Certainly, I don't think the dividend is going to increase anytime soon. And so, representing about 5% of my dividend stock portfolio, I have a lot riding on this company right now. And there's a lot of risk with this investment in particular. I'm eyes wide open. I'm well aware of the risk. I bought a lot of 3M recently. My patrons already know this. I'm taking calculated risk, but the kind of risk we're talking about here, this isn't like the kind of risk at Starbucks. Starbucks, by the way, is doing really well. I just bought a really cool Starbucks cup here in Maui. I'll hopefully share a little photo with all of you here in this video or on Instagram later. Check out the pinned comment. I'll link to my Instagram. But Starbucks, hey, they got some union issues. They got some lockdown issues in China too. Stock tanked. I made it my number 2 position. Right now, boy, it's windy out today. The Starbucks stock is rebounding. Their earnings actually came out today. They're really strong. Kind of issues at Starbucks are nothing compared to the kind of issues at 3M. I want to share that because it's a scale of magnitude that is very different. The types of issues they are facing at 3M right now are very significant. There's a lot more risk with that company than Starbucks. That being said, Starbucks is trading at a PE ratio forward in the mid-20s. The PE ratio forward at 3M is a 13, so it's half of where Starbucks is trading on a PE ratio basis, and that's pricing in risk. There's no free lunch. I take on calculated risk as a dividend investor, but I'm not going to fool myself. 3M has more risk. Hey, put in the comments below, what do you think about 3M? Is it too risky for you? Do you own any 3M? Can you handle the risk? I can handle the risk, but at 5% of my portfolio, I de-risk with a lot of my other positions. Let's keep going. I want to share another significant theme with 3M. Check it out on the screen in front of you right now. And so the next one I want to share is the healthcare spinoff. Honestly, on the Q2 earnings, the stock was up. One of the reasons the stock is doing well and that the stock is up is because of this news, I think, of the healthcare division spinoff. This healthcare division is going to be spun off. It's the quickest growing division at the company, which is awesome. I'm going to hold it, of course. I'm not selling my spinoff shares or my original 3M company shares. Now, when I look at the numbers, $26.8 billion of sales are going to come from the new 3M. By the way, the new 3M company is going to continue to hold 19.9% of the healthcare division. Now, 8.6 billion sales come from the healthcare division. So when I look at this on a revenue basis, just on a percentage basis, about 76% of the pie of the total revenue comes from the new 3M, which is basically the company not including the healthcare division, and about 24% come from the healthcare division. And so that gives an order of magnitude. But now the new 3M is going to hold some shares in the healthcare division, but this is going to be a tax-free spinoff. And so as investors, whoever owns shares like myself, I will then own, I'm excited, shares in 3M, the new 3M that is, and the healthcare spin-off. And so they're doing something kind of like J&J. There's a lot of spin-offs these days, and so J&J is going to spin off into 2 companies. They're going to spin off their consumer division, and I'm going to continue to hold that in addition to the original kind of pharma and medical devices company. the big J&J, that is. And so 3M is doing something different. I love exposure to healthcare. I like that it's going to be standalone. Hopefully they'll unlock some value with the spinoff. That's probably one of the reasons that the shares were up. So that's the third theme I want to share today. The fourth theme that I actually think was really promising, and now I'm talking about a sensitive topic. I'm talking about our military forces. I'm talking about our veterans. I'm talking about people who are going out there and putting it all at line, all at risk, so that the rest of us, like myself, can enjoy freedoms here. And so God bless all of our military personnel watching the video today. I am reporting on news here. I'm not trying to make a political statement or share what is right or wrong. I'm just trying to share what is in the news. And so I want to put that up front, that I truly care about our troops and I value what they do, and I'm thankful for what they do, because that is how I have the freedom to be here sharing these videos and investing in dividend stocks. And so what happened that they shared in the Q2 earnings that was so significant is 3M purchased a company. It was called Aearo Technologies, A-E-A-R-O. Hope I'm pronouncing that right. They made some earplugs. It's being alleged that those earplugs did not serve our troops the way that they were supposed to, and that there's been hearing loss amongst our troops. And so that is obviously not good news. Now, what was shared in the earnings report is that, hey, they're going to establish a $1 billion trust for these lawsuits. They're also going to set aside $240 million in case-related expenses. And so some are saying this just isn't enough to cover all the claims, but basically what they're going to do is they're going to kind of spin off this Aearo Tech. They're going to bankrupt the company, and they're going to basically say, hey, this settles our litigation risk, this $1.240 billion. Now, in fact, is that enough for all the significant litigation related to Aearo? I don't know or not, but that's what they're saying it's going to take right now. I think the stock was up on this news because I think this is a more favorable kind of settlement strategy than was previously anticipated. Now, there's still significant litigation risk with the PFAS chemicals, which could be, who knows, a much bigger can of worms than Aearo Tech. But one thing that's really important to mention is that acquisitions these days carry a lot of risk. We know that Altria acquired Joule, and that was nothing but problems. And now we know that 3M acquired Aearo Tech. I think it was back in 2008. I bet you they wish they never acquired that company, because that company's just become a bunch of problems for them. But I do think the way they're handling Aearo Tech right now with the $1.2 billion to resolve it seems promising to investors, and I think that's why the stock is up. Personally, I see that as a reduction in risk, but I'd love to see this PFAS stuff resolved as well. And now we know why GAAP earnings are so bad, because of all of these charges and all of these expenses related to litigation. And I hope in the future, when making acquisitions, 3M and the other companies I own are more careful. So that's the fourth theme that I wanted to share today. I want to share with all of you the fifth theme, but before I do that, please go ahead and smash the like button if you enjoy this video so far on the windy beaches of the Kaanapali shores in Maui, Hawaii, here at the beautiful Sheraton, where they really do treat you like a king. Literally, they do. Love you, Sheraton. And anyway, theme number 5 that I want to share is just inflation and litigation. I think it's going, I already talked about this at length, but I think it's going to take years. Again, I want to go back to Starbucks versus 3M. This ain't Starbucks here. This is a whole different level of risk. And I think it's going to take years to get through these inflationary challenges that are affecting earnings and litigation. I don't see a dividend increase anytime soon. I think they might do it what I'm saying is I don't see a significant dividend increase anytime soon. Maybe they'll just keep up their 1 penny kind of increases just to keep the track record going with this company. Anyway, that's the fifth theme. The sixth theme is, what am I doing? What am I doing with my personal shares in 3M? I'm holding them in the new company. I'm going to hold them in the healthcare company, which will be spun off. It's anticipated by the end of 2023. By the way, here's the little notebook For all those OGs that remember this, please put in the comments below if you remember my Stanford notebooks. I'm doing my best here to juggle the selfie stick, the phone, the mic, the wind, and the notebook. So thank you everyone who's hanging in there. I love you all. But what am I doing? I'm holding all my shares. 5% of the portfolio. Honestly, sometimes these spin-offs are a little bit annoying because I have even more stocks to manage. I just don't want more stocks. I have like 54 now, too many. Anyway, that's how it goes, but I will continue to hold both. And so that's that. Put in the comments below what you think about 3M. Is it too much risk for you? Are you holding it? Are you buying it like I am? Now that it's 5% of my portfolio, honestly, I bought some more shares just to say I did in the video today and share some stats with all of you. Am I really going to buy that many more? No, I've loaded up on it, but I am reinvesting dividends, and that's going to compound and create a huge yield on cost for me with the 3M company. If you enjoyed the video today, please go ahead and smash that like button. It means the world to me, and please don't forget to subscribe. I have more videos on the way all the time. I look forward to seeing all of you in the comments. Before I go, in terms of a full disclosure, I am long 3M, ticker MMM, StarBucks, ticker SBUX, and Altria, ticker MO. I own those stocks in my personal dividend stock portfolio. And before I go today, in terms of a friendly disclaimer, today's video, it's not investment advice. I'm not a licensed investment advisor. I'm just sharing my journey for fun and entertainment. Investing carries a lot of risk, as we've all seen in recent markets. And please consult your licensed financial advisor before making any moves in the stock market or any kind of financial market. I also want to share with all of you, please go ahead and choose aloha. That's the way to live life, in my humble opinion. I love you all. I will see you in the next dividend stock investing video.